Tensions in Asia, the Middle East and Europe escalate as geopolitics become less stable than at any time in recent decades. The federal government pushes for wage rises for aged care nurses and a rough weekend for the local housing market. It's Monday, the 8th of August 2022. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Adam Lang, and good morning, Sean Aylmer.
Good morning, Adam. You're standing in for Michael this week.
I'll do my best.
Yeah, he's taking a well-earned break. He's off skiing, I believe.
Yeah, as we nickname him, The Difference. He is on slopes, and so I hope he's having a wonderful time.
I'm sure he will. Did you have a nice weekend?
I did, Sean. It was glorious here in Sydney. How did you go?
Yes, I had a great weekend. Lots of kids' sport and things like that, normal things, but the weather makes a huge difference.
Yeah, the carnivals of sport continues. And speaking of carnival, should we get on with the show?
Let's go.
So immediately after the show, stay listening for Sean's chat to Tim Murphy. He's the Director of Manager Research Asia Pacific at Morningstar.
That's right. And we spoke about the investment outlook, what Tim thinks about investing in bonds particularly. We had a long chat about that. What he thinks about growth versus value in the equity debate. Great chat for anyone interested in investing.
He spoke so well. I'm looking forward to listening to that interview back. So the main story this morning, Sean, the globe is not looking like the safe place it once was, with China warning the US, Japan and Australia to butt out over Taiwan, renewed conflict in the Middle East and the ongoing war in Ukraine.
That's right, Adam. Starting in the region, tensions over Taiwan are at their highest point in decades. Taiwan accused the Chinese army of simulating an attack on its main island over the weekend as missiles flew overhead. Some of China's largest ever drills were due to finish yesterday. Analysts said they practiced blockading the island nation of Taiwan and invading it. President Xi Jinping, of course, has made it clear he wants to reclaim Taiwan, and the US has made it just as clear it will help defend the nation. Taipei claims that there were several breaches of the demarcation line that splits the two countries in recent days, a line Beijing doesn't recognise. The United States, Japan and Australia issued a joint statement calling on China to halt the exercises after meeting on the sidelines of the Association of Southeast Asian Nations, that's ASEAN Summit, in Cambodia. China basically told the three countries to mind their own business and said it was unacceptable for the finger-pointing to occur. The federal government's line yesterday was that China's military aggression in response to US House Speaker Nancy Pelosi visiting Taiwan last week was disproportionate and destabilising. Opposition defence spokesman Andrew Hastie yesterday said the strategic outlook was very bleak and Australia needs to maintain good relations with China and Taiwan. Mr Hastie, of course, served for Australia, including in the SAS, in both Afghanistan and the Middle East.
And speaking of the Middle East, Sean, what is happening there?
For the past 4 days, rockets have been flying across the Israel-Palestine border. Yesterday, an Israeli airstrike killed the senior commander in the Palestinian militant group Islamic Jihad. That's the second leader of that group to be killed in recent skirmishes. At least 29 Palestinians have now been killed in recent days. It's the worst violence on the Gaza Strip since 2021.
And Sean, it is a remarkable time we're in. We've got a third conflict, as we know. What's happening in Ukraine?
Well, the war continues and there are growing concerns, particularly in Europe, about Russia's relationship with Turkey, particularly their economic ties. On Friday, the Turkish and Russian leaders agreed to expand their cooperation on trade and energy, triggering concerns among Western allies. In terms of military action, Russia continues to pound away at cities in Ukraine's east, with concerns a nuclear power plant might have been seriously damaged from airstrikes. The good news, and there is some good news in that area, is that the first foreign-flagged ship since the war has arrived in Ukraine and will be loaded with grain. But Adam, all up, the world is a very dangerous place at the moment.
Yeah, it's extraordinary. And at first it's a humanitarian issue, but we know this flows through to so many businesses and economies around the world too. How did our local market end up on Friday?
The S&P ASX 200 rose 0.6% to finish at 7,016 points. It was the first time the benchmark index closed above 7,000 points since June, so that was good news. For the week, the index was up 1%. On Friday, among the large caps, BHP rose 2%, Rio Tinto jumped 2.4%, and Fortescue Metals was 3% higher. The banks were mixed. The retailers were strong, so too Telstra.
So, Sean, around the international markets, they're also watching all of these events too and the effects on economies. How did they go?
Well, Wall Street was mixed over the weekend. I must say it was more interested in what's happening domestically in the economy. There was a US jobs report that showed a larger than expected payroll gain and wages growth. That suggests there's a bit of heat in the economy. It certainly adds weight to the argument that the US Federal Reserve will keep lifting interest rates. As a result, banks and energy companies did well, while tech stocks fell. Tesla was hit particularly hard, dropping more than 6%. Now, Adam, did you fill up on the weekend?
No, Sean, and I feel foolish for not doing it. This end of the sort of winter sports season, we've had to drive to lots of different grounds around Sydney because of all the rain issues and grounds being closed.
Yeah.
So I've used a lot of fuel and I haven't filled up. I really should have. Did you?
Yeah, it was a great time. I did 320 kilometres on Saturday, I'd just like to say, ferrying kids around. But I did have to fill up, and I think I got it for like under $160 or $1.60 a litre, so I was delighted. Petrol prices are definitely falling. Now, oil fell to its lowest level in almost 6 months over the weekend as weaker US gasoline demand and concerns about a recession weighed on markets. Brent crude, in fact, fell towards $92 a barrel. We haven't seen that for a while. And Adam, the Aussie dollar starts the new week trading at just over 69 US cents.
Come on, the Aussie dollar. We'll be back in a moment with the rest of the day's business news. The Albanese government will lodge a submission to the Fair Work Commission today, pushing for a significant, meaningful pay rise for aged care workers, Sean.
Of course, it has to find 900 extra nurses to fulfil a key election promise. A meaningful pay rise would help them find the staff to ensure that there is a registered nurse employed within all aged care homes 24/7 by the middle of next year. That's the promise.
Sean, we hear so much about hybrid working and working from home, but nurses just can't do that, can they? They need to be on site.
Yeah, that's exactly right.
So the federal government also announced 6 regions for proposed offshore wind energy projects, saying it could result in up to 8,000 jobs annually.
That's right. The government has called for public consultation on the proposed Bass Strait off Gippsland area. Other regions for offshore wind energy projects, or at least that have been marked for those projects, include the Pacific Ocean regions off the Hunter and off the Illawarra in New South Wales, the Southern Ocean region off Portland in Victoria, the Bass Strait region off northern Tasmania, and the Indian Ocean region off Perth, Bunbury. Of course, it's part of the government's push to reduce carbon emissions by 43% by 2030. It is a long-term play, but if you can develop wind power, it would certainly help.
Yeah, and certainly beyond 2030 to net zero by 2050, it all has to play a part, right?
That's right. Yep.
Prime Minister Anthony Albanese is actually having a break this week.
Yes, he was very busy in the run-up to the May 21 election and even busier afterwards. He's on leave this week. He's staying in Australia. The other tidbit he provided, which, Adam, you will love.
Okay.
Mr. Albanese has set up a vinyl record player at the lodge.
Oh, bless him. Well done. I'd love to see his collection. Actually, I believe he likes his indie music.
Oh, is that right? I have actually read, it's amazing, he and I are about the same generation and we kind of grew up in Sydney. I didn't ever know him, but it's amazing when he talks about music, how similar our tastes were or are. I'm not sure.
You've got a lot in common in that regard.
Yeah.
Okay. Moving on to property, there was an uptick in clearance rates in the housing market over the weekend, although there were many fewer auctions.
That's right. The nationwide preliminary clearance rate was 59% over the past week, according to CoreLogic, but there was about 20% less stock up for sale. In fact, it was the quietest weekend since Easter in Sydney, at least, with just 475 houses going under the hammer. The clearance rate in that city was 61%. In Melbourne, it was 62%. Adelaide was the best of the capital cities at 66%, while Canberra and Brisbane were both below 50%. Interest rates are certainly biting, Adam, with house prices in some of the capitals, notably Sydney and Melbourne, falling fast. And just as an aside, according to the Financial Review, retail billionaire Brett Blundy has sold the Walhallow cattle station aggregation, that's in the Northern Territory, for close to $250 million. Apparently the buyer was a Sydney-based asset manager. It's a record price for a single cattle station deal. Not bad.
That gives new meaning to the phrase, we're talking about cattle stations here, aren't we?
Yeah. Yes, that's true. That's
What
true.
a huge property.
Yeah. Well, it's an aggregation of properties. So I think there's
right.
a number of properties around it. Yeah.
Okay. So let's move on to the Reserve Bank, and it updated its economic forecasts on Friday. It wasn't all pleasant reading.
No, the central bank says inflation will remain high for the next year before falling towards 4% by the end of 2023. But the bank warns that expectations of higher inflation could result in actual inflation remaining higher for longer. Finding a job isn't going to be a problem for quite some time, though. The bank has forecast an unemployment rate of 4% or less for the next couple of years. It's already at a multi-decade low, and it's going to get lower later this year, according to the Reserve Bank. It reckons it'll hit 3.25%, which would be pretty incredible. But economic growth is expected to fall sharply, in part due to the run of interest rate rises. The economy is expected to expand by 3.25% this year, and then 1.75% in each of the following 2 years. Household spending is hurting from higher prices and interest rates, and that will continue with real disposable income growth and house prices set to hit net wealth. Internationally, the risks are skewed to the downside, the Reserve Bank said. It really wasn't a particularly upbeat report.
No, it wasn't, Sean, but information is power, and I know you've got the week ahead with Stephen Koukoulas coming up after this podcast, and if you want to know more, information is power, and it's all there.
Ever the optimist, Adam, ever the optimist.
I am. Pizza outlet Domino's is taking on McDonald's and Hungry Jack's. Well, sort of.
According to Domino's, it's a whole new burger experience. Now, you'd expect them to say that. Actually, it's a pizza that's going to taste something like a burger. The burger joint range offers a pizza version of a cheeseburger with ingredients such as beef burger pieces, American cheese slices, mozzarella, and butter pickles topped with special burger sauce. Oof, I'm not sure whether that's what I feel like this early in the morning. Anyway, Domino's has been under pressure, really. Its share price has halved over the past year or so, and it's been a very rocky road for it. It's facing higher ingredient costs. It's now charging a delivery fee in some areas, and it's really trying to win over shareholders again.
Atlassian, Australia's homegrown tech superstar, reported better than expected earnings for the June quarter, and that sent its share price, which it listed up on Wall Street, up 10%.
The group made quarterly revenue of about $1 billion, which is about 1/3 higher than 12 months ago. Now, it still lost money, mostly because it invested more than $100 million in people and research and development, but shareholders liked the report. Atlassian's bosses, Scott Farquhar and Mike Cannon-Brooks, believe the company is somewhat insulated from tightening economic conditions as its products are targeted at technology developers, who they say are typically the last roles businesses cut back when they're tightening their belts.
So Atlassian has been such an interesting company. It's well beyond a startup, as we know, but do you think it's moving into that more mature phase of its life now?
I suppose so. It still needs to make money.
Yeah.
I mean, it's not a startup. You're right. So, it does make money. But when you have these quarters and halves where it's not making money because of reinvestment, you can't say it's a mature company yet.
Yeah, right. Well, let's move on to overseas news. Former President Donald Trump provided his biggest hint yet that he would run again in the 2024 presidential campaign.
You never know, though, with Donald Trump, do you? If he's just trying to please the crowd or whether he's serious. At the Conservative Political Action Conference over the weekend, he said he had made his decision. He just wasn't sure when to announce it. Before or after the midterms. He then provided a throwaway line saying it was time he stepped back into the ring. So it sounds like he is going to put his hand up for the 2024 election, but I wouldn't put my house on it. Certainly polling of the Republican Party members at the conference put Donald Trump as their favourite option.
He is always the showman, isn't he?
Always the showman.
Now, Sean, the old and, dare I say, wise adage is to follow the money. And Warren Buffett, arguably the greatest investor of his generation, is back buying equities.
That's right. Over the weekend, Mr. Buffett's Berkshire Hathaway said it was a net buyer of equities during the June quarter, about $3.8 billion worth of equities. In that period, the S&P 500 shed 16%. Now, the debate on Wall Street is whether there's further falls to go, but clearly Mr. Buffett believes there are opportunities in the market at the moment. Got to remind our listeners, we are not an advice podcast. find some professional help before you actually do any investing. And just before we leave that story, he is back in the market. Warren Buffett is back in the market buying, but Berkshire did lose about $44 billion during the quarter, largely due to its Geico car insurance business. So it's not all good news there.
No, but the scale of this business, Berkshire Hathaway, still staggers me. $44 billion during the quarter lost. Amazing. So, Sean, up next is the Fear and Greed daily interview with Tim Murphy from Morningstar.
Yes, as we mentioned it, great one for investors. Straight after this show, if you want to know particularly about bonds, we talked a lot about bonds and where to invest in equity markets.
Yeah, particularly in this changing and higher interest rate market. It's a great interview. And we've also got the week ahead with Stephen Koukoulas. That's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Adam.
It's Monday, the 8th of August, 2022. Make sure you're following the podcast. Join us online on LinkedIn, Twitter and Facebook. I'm Adam Lang, and that was Fear and Greed. Have a great day.